And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Happy Capital Preservation Friday, everyone. It is January the 27th. My name is John Hoagland. Thanks for trusting me with your time as always. Our content is accurate. Our goal is seeking accurate context, good risk management, and always remaining patient in your trading. Good morning, everyone. Sorry I was a little bit late getting started here this morning. Not in preparation, but all of a sudden my keyboard stopped working. I have no idea what happened. Apparently I still have gremlins hanging around here, but I'll get it figured out. Just all of a sudden, putting the title together for the Market Prep this morning, it just stopped working. I don't know what. I've got another one on here, and that one's not working. If I did something, somebody please tell me. This morning, economic numbers, a whole bunch of them, not necessarily all that impactful. We had the consumer personal income and spending largely came out as expected. Personal spending was 0.1% lower than they were expecting. The PCE price index came out 0.5% lower than they were expecting, but all the other numbers came out as expected, and we're still waiting for the Michigan sentiment and the pending home sales to come out at 9 o'clock this morning. And that's going to be about it. Earnings that are already out this morning. The notable ones, American Express missing on both, Chevron with mixed results, and Colgate-Palmolive beating on all expectations. And who doesn't need toothpaste and soap? U.S. stock indices set to open a little bit lower, nothing tremendous to the downside here, with the numbers that we still have left to kind of deal with here today. Apparently, we've seen some good news coming out lately, and that good news has been treated as good news for the markets. It's a good prelim for the GDP that came out yesterday, reducing some of the fears of recession, inflation still raging and still pretty much an issue in the world. The VIX this morning up from the settlement from yesterday, but still down below 20, even below 19. Last I checked, 1897, the dollar index 101.8, hovering below that 2% or that 102 level. And the yield on the 10-year still holding above 3.5%, just barely at 3.53%. Good morning, everyone. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You get notified when we do go live. This is our last broadcast for this week. It was a really good week. I think we had some really good a couple of good webinars today, and hopefully you're going to be ending the week positive. That's why we always call Friday Capital Preservation Friday. Going to say good morning. The rooster is crowing early this morning, first in the room. Rooster, you win the prize. Jules, good morning. Rob T. Jason Bartles, Funnel Mentor, good morning. There's a new name I haven't seen before. Glad you're with us. Sarah Hall, good morning. Prayers and love to you as well. Alejandro, Timothy Marks, Mark Sanders, Caesar. I missed the auction process webinar. Any chance I can watch it and get the worksheet? Rooster, email me, jhoagland@topstep.com, JHOAGLAND at topstep.com. I can send you the recordings, and if you registered for it, you're going to get the email probably on Monday with the recordings and the worksheet on it. So if you did register for it, you'll be getting that in your email. Terry King, good morning. Shaw, Sarah, happy Friday. Yes. Mark Sanders, step 1, daily loss limit by end of day. No, it is intraday. If the platform has taken you out at your daily loss limit, that's it. Jason, good morning. Andy, good morning. Kevin, Don Clemens, John, good to see you. Caprice, Razmik, Vince, my guy. Charles, Bill, good to see you. Kevin putting some of that information from the Russian fuel price cap news, $100 a barrel on diesel proposed with ICE gas oil front month currently at $130, my goodness, per barrel, and a comparable New York NYMEX US dollar at $139.29 crude prices near key upside breakout levels. Yeah, we've been kind of talking, Kevin, about the idea that the White House is going to start buying crude at $80, and that, of course, has put the floor in, at least for now. I agree, we're at some pretty key levels here. Mike, good morning, Nastic. Good morning, Rusty Golfer, my spirit animal. Hegel Matters, Great Dane, good morning. JM, Kevin, good to see everybody. Kevin, yeah, yesterday at 10:20, forecasted we would return to 40.64 by 1 p.m. Didn't get there till 2:30. Yeah, well, you were right. We did get to the S&P is up to that weekly kickoff high yesterday. We're going to see that in the charts in just a few minutes. Jacob, good morning. Core PCE prices index came in line with estimates, with month over month up 0.1% versus prior, year over year down 0.3% versus prior. Fed's preferred measure but lags CPI in reporting time. Yeah, they do like to watch that PCE level, don't they? Good morning. Is there a way to see the webinars? Yes. If you registered, you're going to get an email. If you didn't, they're going to be on this YouTube channel probably on Monday, if not today. So you'll have the opportunity to see them at will. Octor Apps, good morning. Peter, David, Scott saw and he conquered. Orion, good morning. Mark, good morning. Wayne, can you trade pre-market with the time frame? You can trade any time the markets are open, but you have to be flat in the Top Step Trading Combine and funded accounts by 3:10 Central. You can open positions at 5 o'clock Central when they reopen. Jacob made step 1 yesterday, starting step 2 today. Nice job, Jacob. Thanks for letting us know. I always like to hear the good things that are happening for people here. Fred Decker, good morning. Yes, Mr. Biden has set the price, Kevin. Yep, you got it. Jay, good morning. So, yeah, it's the end of the week. If you've had a good week, again, we call this Capital Preservation Friday. We don't want to ruin a good week. Every day when I sit down to trade, I do my homework. I think about the markets. I gauge the auction process, and then I remind myself that today I'm starting from zero. If I had a good day yesterday, if I had a good week, I don't want to jinx myself by saying, well, I don't want to lose any money today, because that usually means I'm going to lose money that day. I'm starting from zero every day. But again, if you've had a good week, you got to be reasonable with those downsides on these Capital Preservation Fridays. So every day I start from zero. The money that's in my account is mine. It's not mine to play with. It's mine, and I'm going to protect it and add to it every chance I get. Good morning, Alfred. Let's take a look at the charts now. E-mini S&Ps. Volume was okay yesterday. We had another increase in open interest of 18,000. We had negative delta. What does that tell us? Tells us there was an accumulation of new longs in the S&Ps yesterday. Where did that accumulation of new longs take us? Right to weekly kickoff high. This is an important inflection level where I'm looking for longer time frame traders to adjust inventory. They may have adjusted inventory coming up to this level yesterday. We are very small overnight range inside extended and regular trading hour range from yesterday. Here's the 30. Settlement, we did end up putting up a late spike yesterday. We are opening below the base of the late spike with great probability. That is rejection of higher pricing. That would make sense with weekly kickoff high up here. Adjusting inventory is something we expect, coming to it and moving away from it in either direction. So right now it's looking more like we're rejecting higher pricing up near weekly kickoff high. No real overnight inventory with which to speak of. Very narrow range. Opening in value tells me I'm probably going to see better trade locations as the day goes on. Here's the TPO chart from yesterday. We have a late spike. We did close up here at 40, 75, 50, 75, 50, right up here. Now it looks like we're going to be opening below the base of the late spike, which is 40, 69, 75 is the base of the late spike. Look at the overnight high. We rejected the late spike even overnight. I'm getting a cold. You know, every time I start taking vitamins, I get sick. I don't know what it is. Look at what else we have here. Well, we don't have an initial balance on either extreme of the range from regular trading hours yesterday. We have a pretty low excess low here. This was looming in my mind all day yesterday, and as we continued to rotate higher, that weekly kickoff 40.76 was also, kind of in my mind, right? So we got 4 ticks through it before we closed, and now we're rejecting that level. That is now presenting as excess, because we've opened below it. Price got too high, wouldn't accept over time. We're opening below it. So I think the idea is either range bound or a rotation day to the downside. That all changes if we accept back above weekly kickoff high here at 40.76. We've got a little bit of an anomaly here that's been run through many times in the overnight. Little anomaly here, little anomaly here. This isn't a very confident upside move. Remember, we have a low excess low down here. So the nuances, the tea leaves, and the chicken bones are suggesting we need to start looking for opportunities to sell strength. Again, that all changes upon acceptance above weekly kickoff high 40.76. Take a look at crude oil. The energy of the universe here, it seems. We're still within last week's range. We haven't tested the low. We tested the high on Monday of last week's range. And it looks like we're going to be heading to that direction, perhaps, on this move to the upside. But overall, I think we're still in range, but we're looking for a test of the upper extreme of this balance area. Open interest continues to build. An estimated another 16,000 contracts added. That makes it 238,000 contracts since the beginning of the year has been added in energy to crude oil, if you'll pardon the pun. There's some significant moves coming. We're still range bound. We're still in range bound rules. Fade the extremes. Go with accepted breakouts outside of balance. My apologies. My goodness. So we got the 30. Here's our overnight inventory is long. You can see the overnight inventory already kind of reconciling back into range and towards where the market opened last night. It's at 5 o'clock, which was down here. So all of these overnight longs are getting a little bit nervous. If we're thinking of looking for opportunities to buy weakness, this could be part of our opportunity to do that, is when our overnight inventory unravels, taking price lower to give us better trade location for longs. The obvious and easiest path, I think, is to get a test of last week's high and weekly kickoff high today. It's the closest visuals that I can see. Here's the TPO chart. Excess. Normal variation day, upper end of the range yesterday is the extreme of the initial balance. But we had excess and we have a low excess high. One of the reasons and one of the nuances that says, with that low excess high, the upside auction may not be finished. We've got a low excess high here as well. Actually, a poor high up here. But we still have kind of a low excess low here as well. Low excess, low excess, low excess, low excess. I'm going to be patient. I'm going to be looking for my bigger opportunities at the extremes that we just mentioned. We just traded to this point of control here from Monday. Very prominent point of control. We tested to the TPO point of control yesterday and put in this weak high. Well, low excess high. If we can come down here and test this point of control and put some structure in the day time frame there, that may be our signal to act. Gold. We didn't do the NASDAQ yet. Let's do the NASDAQ. Yes. So NASDAQ continuing to present stronger, though it is at lower levels off the all-time high. Good volume yesterday on a move higher, adding 3,000 contracts on a move above weekly kickoff high. This weekly kickoff high, we closed above it in the NASDAQ. We haven't gotten to it truly. Well, we did get to it yesterday in the S&Ps, but no acceptance above it, where the NASDAQ is showing possible acceptance through time above that level. Look at our low from last night. Our weekly kickoff high is 12.012. We got within 4 points of it on the downside, in the overnight session, but it's showing a degree of support for us, isn't it? We got a lot of help from the tech sector this week for continuing to see the NASDAQ performing better than the S&Ps. Here's the 30. So again, really no overnight inventory to speak of. The market is in range, in value, suggesting we stay patient. We did have a late spike that is showing signs of rejection, and settlement is all the way up here at 12,106.75. Here's that weekly kickoff level that we tested, relatively close to in the overnight session. You look forward to seeing if we have an opportunity to throw a line in the water in this area. Here's the TPO chart. Here's our late spike, the base of the late spike, 12,089. All of the overnight activity was below the base of the late spike, indicating rejection of higher pricing. Normal variation day. Excess high, low excess low, central point of control. we could just digest all day today. We don't know. We know that the markets are currently focusing on next Wednesday's FOMC announcement. So if they're going to be really just kind of falling into an area where there's a lot of hedging going on, there's a lot of liquidation of positions for speculative traders coming into Wednesday, we could just kind of hang out. We're already in value from yesterday. Why not just hang around there? I don't know. Gold. Volume was pretty good yesterday. We got a pullback, but upside structure remains intact. Open interest, we lost 14,000. That could really be more of a function of rollover. I'm still looking at the February because the volume is still higher, but by Monday, we'll be looking at April. You go right past March, and you start trading April on Monday, if you're not already. Daily bars. Look at these daily bars. Look at all the excess. Just repeated long shadows on the bottoms of these candlesticks. Buyers hanging around down here, it seems. Take a look at the 30. So this is our little pattern we've got going here. We open, we tank, we close higher. We open, we tank, we close higher. We open, excuse me, we look lower, we close higher. We open, we tank, we come back. This trend line is it impactful yet still? I mean, this was a 5 point of contact. We couldn't close below it yesterday. This was an easy area to get chopped up yesterday. But now that we look at it, it's showing excess. Excess. No 30-minute bars closed below that level. Well, it looks like we're going to be closing this 30-minute bar right there below that level. This is a chop zone here. I'm avoiding it. And where are we? No real overnight inventory. We're inside value from yesterday. This trend line may become useful, but yesterday it turned into a buzzsaw, because if you were looking long above and short below, you could have gotten cut up a dozen times by trying to do that before it decided it was going to hold that level and close higher. All right. Here's the TPO chart. Normal variation day, upper extreme, the high of the initial balance. Excess on the high, but not necessarily a strong high. There's an exactness with the previous day's high here. I'm calling that kind of a weak high. Excess on the low. Excess, weak high. Late spike rejection. Tested back to it, rejection. We're really sort of range bound here when you look at these profiles, aren't we? I mean, our overnight low down here looks interesting for an opportunity. Overnight high is the high of value. It is the regular trading hour session high, the high of value really from yesterday. Be patient today. Be patient. These markets, I think, expended a lot of energy this week. Here's the euro. Similar to the gold market, right? We had 3 tests of weekly kickoff high on the daily this week alone. We were having a very difficult time exhausting the sellers up at this level. We added another 600 in open interest yesterday. Volume continues to rise even though we're kind of balanced here. There's energy coming and a change coming to this market in one direction or the other. Here's the 30-minute chart. Overnight inventory short. Here's that same trend line in gold as it looks on the euro. Still looking below it and rejecting below it yesterday. We're really in value. We haven't really changed much as far as the euro is concerned. So we're below this trend line through attrition. Settlements up here. Overnight inventory short. If we can't start taking out yesterday's value low or yesterday's low, Wouldn't it be kind of nice to see a nice rally off these levels down here? We've got our overnight low, we've got value low, we've got yet the low from yesterday. Looks like there might be some fish under the pier down here. Be patient. Here's the TPO chart. So here's our regular trading hours. Really, the day before yesterday was the only real test of weekly kickoff high. This is black line I put on here represents that. All the other opportunities for us to see that was it was in the overnight session. Here's the normal variation day here. Excess high, low excess low. Just getting down to that kind of area down here where I would be thinking about looking to throw a line in one way or another. This move actually for the last couple of weeks has been relatively organized. We haven't left any points of control unchecked on this upside move. That to me is a sign of strong structure. We got to go all the way back here before we see any kind of naked point of control. We've got the TPO here. We've got the volume here. It's a long ways away. All the other points of control have been rechecked on the way up here. So again, that's a sign of strong structure to me. Excuse me. Can't believe it. I'm getting sick. I should be in Mexico with Randolph. The 10-year rates have firmed up back firmly above 3.5% here in the 10-year. We added 21,000 contracts on a down day here. Some short selling perhaps coming in. But I honestly don't think this market is going to go anywhere or do anything fantastic until after the FOMC meeting. Last week's low is in play today. Volume still low. A lot of hedging, a lot of liquidating for next Wednesday. Here's the 30-minute chart. So we talked yesterday about excess on the high here and a weak low. We have excess on the high here and another weak low. We'll see that in the profiles shortly. Overnight inventory to the short side. Some reconciliation of those positions has occurred since the open. We have not, however, closed the gap, or have we? Let's take a look. So yeah, we closed the gap to the tick. But again, excess, low excess. Excess, no excess. Market is kind of telling us that the downside auction, at least for the time being, is unfinished, and we're still seeing it continue lower. But again, I'm not. If I were an active trader in the 10-year, I would be probably lowering my expectations and maybe taking the day off. And here is the natural gas. Downside structure, when they say it can't go to zero, remember what happened 2-3 years ago with the May contract in crude oil. It went negative. We don't see that happening here. Of course, the auction strength, or the auction health, I should say, is to me a B minor. It's in rollover, and we're still seeing continuation to the downside. Adding 8,800 in open interest yesterday could have been more a function of rollover than directional activity. Here's the 30. So we added 8,800 in open interest on an up day. Would you say that that's new longs? We got some naysayers to the downside here. Overnight inventory is now flat. We're trading basically right around settlement. We've got a gap above. We've got naked points of control a go-go above. Would this be a good low? Only time will tell. Stay tuned to As the Market Turns. We did put up a late spike. We closed right at the base of it. We are now rejecting higher pricing by where we've opened today. Nothing's really changed that much. Interesting. I don't trade nat gas. To me, it's a killer sometimes, but I'm fascinated by it. We had somebody ask to add that, and I haven't been able to take it off because I just want to see how it responds, how it acts. Does anyone know what strike has the most options interest? I would have to go and do some research on that, and don't have time for that this morning, but we do have a participant, Joe D, which he hasn't been around lately. I think he's just taking some time off, and he's really kind of hip on that. I've got the website that he looks at open. I haven't subscribed to it here just yet, but learning a little bit about what they're talking about as far as where the pain is. Those high open interest strikes tend to create pain, and markets do tend to go to pain. So okay. Yeah, Freeport liquid natural gas port to reopen in 10 days. Still not enough open interest in that gas. Yeah. All right. Well, it is Friday. Let's get going here. Take your deep breath. Stay humble, grateful, and creative today. I'm going to see if I can get my keyboard to work. And look forward to seeing you next week. Trade well today. Take it easy. Protect profits. Be kind to yourself. Be kind to others. Say a prayer for peace. Remember, forgiveness is for you. And have a great weekend. Get some rest. It's going to be an interesting, fascinating, and hopefully profitable week next week. Blessings to you all.